Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of February 3rd, 2025. Let's get started. SEAF signals for this week. Repeats of financials and communication services from last week, and we swapped out consumer discretionary for industrials. As you can see here, industrials took a little bit of a header on the trading week, and consumer discretionary kind of charged up for being good, but not great across the board, with a nice strategic quarter of 2, sitting in trading week of 4. Financials, we got full tilt boogie ahead with 1s across the board with an overall ranking of 3, and communication services doing well, kind of staying in that middling road. Interesting enough, technology at the bottom. Now, we often don't see XLC and XLK separate from each other. The correlation going back the last 5 years was 0.98%, I believe, and we're currently at a 0.59 for the last 3 months. That dispersion is likely due to the AI disruption that we had last week with with DeepSeek and coming in and kind of breaking apart all of the money that was spent in technology. But consumer, like I said, communication services doing well. Into our heat map. Again, nice and strong up here up top with financials. We do have a nice green setting up here, like I like to see, with the red kind of correlating in the bottom. We are seeing a little bit of weakness here in the middle. Flows were very interesting last week. We were net down on flows, 0.27% down last week. We had two major down days coming on Monday and Friday, and a major up day on Thursday. So flows really kind of all over the place last week. Overall net down, but showing major strength here. Financials in the trading week 1.81%. That is double the kind of the average for number ones on the trading week. So financials looking really strong, and technology a negative 0.94, really kind of burying technology here at the bottom. But again, generally in the middle, we're seeing a little bit of overall, not weakness, but just not a lot of strength really outside of financials. 0.22% for healthcare, which is looking interesting. We'll show the rainbow chart for that in a second. And again, some decent numbers here for communication services and consumer discretionary at 0.19 and 0.17 respectively for the trading week. Overall, definitely seeing some strength, and strength will show up a little bit more when we hit our rainbows. Speaking of rainbows, seeing some nice relative outperformance for communication services. Really since we hit this low and a void in late October, or about late September, October of last year. Really nice relative outperformance, and really kind of shooting up the charts in the last couple of weeks as we have entered into this favored ranking with this nice relative outperformance. Looking at financials, similar boat, kind of testing this resistance here on the relative performance side of this chart, but having some nice upward momentum in the relative performance versus SPY as we sit in this upper favored ranking. We'll look to see this continue strength here. We tend to have some good outcomes when we're sitting in this upper favored, as we can see here. So, not projecting cash flows as our usual caveat, but sitting in this upper favored tends to correlate with these nice big relative outperformance moves, and we are starting to see that in financials. Looking at consumer discretionary, we had this nice big run up in consumer discretionary here toward the late part of 2024. A little bit of a sideways moves as we have drifted onto neutral. We're heading back into that favored ranking with a night, and you can see here we're heading in the right direction. We do have this upward resistance here on the relative performance side of this chart, but seeing some positive things in consumer discretionary. Want to show you the negative side of things. Energy kind of doing what energy has been doing over the last couple of months. We come up, touch into favored, and then we right back down to this avoid. Really broadening this underperformance trend that we've had going back to March of last year. Keep trying to buy it out. I assume there's some managers out there that are saying that it's got to, at some point, the relative performance, that energy needs to be bought, and they keep making these attempts, but they don't. These trends aren't aren't sticking for energy. So energy is second to last, I believe, on the list here. Actually, it's got the same ranking as technology. Just haven't had the exact strength in outflows in the near term, which is why it's slightly ranked above. Next up, looking at technology. Technology is ranked worst. It's a 31 overall ranking. It's actually tied with energy at the bottom here, but in that deep of void. As I mentioned earlier, the correlation between communication services and technology is broken in the last 3 months. That doesn't mean it's broken forever, but just seeing that divergence, likely to do with all the CapEx spending that we saw in for AI and the DeepSeek kind of blowing that up and showing these companies that they didn't need to spend as much money as they did. All this stuff will get resolved. Things are never as bad as they seem in the moment, or as good as they are when we want them to be. So in general, looking at technology, really much of a sideways pattern in this relative outperformance. We are seeing a little bit of a downdrift versus SPY as of late, but just to keep things into context, this is a very much a sideways move for technology, and it has been that way for several months. So we'll keep an eye on this, but we are in a deep void. We do not want to be in technology at the moment, but again, very much a sideways pattern overall here. Last but certainly not least, and an interesting move here as healthcare attempts to come back into favor. Currently ranked fourth overall in the model. We're seeing twos in the tactical month and the trading week. We will want to see some sustained flows here into healthcare, as we did kind of attempt to do this before, just about a month ago. So we will want to see a little bit of sustained moves, but it looks like we have a little bit of a bottom here on the relative outperformance side of this chart as we continue to try to maybe make a little bit of moves. Again, healthcare was a pretty big dog here in 2024, so we're looking to kind of try to break out of this a little bit and head into favored. That is all I have for this week. I look forward to breaking the model down with you all next week, and thank you.